Hello ladies and gentlemen, welcome back to another Bitcoin video. The focus of this video specifically is the monthly chart. That's the main topic we're looking at. We will be diving into short-term price action, and also towards the end of the video I will be answering multiple questions that I got under yesterday's video, some of which I think are extremely interesting. But the bulk of the new information we're discussing is the monthly chart and also the monthly returns chart on Bitcoin. The monthly chart is rejecting at this point in time from the 50 EMA, the 50-month EMA. The last time we did that was in mid-2022, just before a big drop on Bitcoin downwards to around 15K a couple of months afterwards. So we do need to look into that. We need to look into that because obviously that's a relatively bearish scenario there. But the monthly chart has made good progress as well. We'll dive into all of that in a second. Without further ado, check out the VIP group. We've got the results from Q4. You can check the results of the VIP, what percentage profit we pulled on trades. We had massively good trades in Q4, and we're following that up with massively good trades to start the year here in 2023. So check out all of that in the pinned comment description. Without further ado, guys, let's dive straight into the video. So straight off the bat, I want to dive into the monthly returns chart on Bitcoin. This chart displays every single month in Bitcoin's price history from the first day of the month to the last day of the month, measuring the total gain or loss within that month. You can see green and red. Obviously, green represents the month as green and red represents the month as red, obviously. And so you can see January 2023 was actually the second most bullish January in Bitcoin's price history, the first being 2013. If you're taking into account diminishing returns from 2013 to 2023, a 10-year period of diminishing returns, you can see that actually 2023 January was probably by far the best January and the best month Bitcoin has seen in a very long period of time. In fact, the last time we saw a month that big was 2021 October, and that matched the gain of 2023 January. So actually before that, the last time we saw a month this big was actually November 2020. So we had the biggest month in Bitcoin's price history, basically since November 2020, matched up with October 2021. So huge January, guys, huge January, huge explosion off the lows. And that's great. We caught our buying plan within that January period. We got an average price of like 19K-ish. And so it was good to see. I am a believer the Bitcoin bottom is in. I do think the Bitcoin bottom is in. But I suppose the big question now is, after such a large January, can we expect a bullish February? That's the big question everyone's trying to answer here. So what we can do is we can look at this from a macro perspective, because we have to look macro. Short-term perspective, it's very hard to predict exactly where the short-term price action will lead us to at the end of February. That's 22 days away, so you can't really predict short-term that far. But macro scale, you can try your best to do it. And macro scale now, we're looking at the monthly chart. We can see we've made some good progress in the monthly chart. We had a resistance line on the monthly chart on the RSI here. We broke it to the upside in the last monthly candle close. We saw a bullish engulfing candle on the monthly chart as well. And we see two major support levels on the monthly chart, one of which being a resistance at this point, which is red, and one of which being green, which is the support zone. That support zone's at 19.3K, which is the 2017 all-time high on the monthly chart. And the other one here is at 23.4K, which is a major rejection zone, right? What we can see now on the monthly candle, and this is the topic of the video, right? It's quite bearish at this point in time. What we can see is that the 50 EMA, this blue moving average, has acted as a pretty major line for Bitcoin on the monthly chart, okay? We've bounced off of it a few times. Yeah, we've seen invalidation wicks below it. Yeah, we've seen candle closes below it on a couple of occasions. But generally speaking, this line's pretty important, okay? We generally play around with this line as resistance and support on the monthly chart. And right now what we've seen, okay, in 2022 specifically, we saw in the month of August 2022, we saw a rejection of the 50 EMA. We saw a monthly candle close below that red resistance line, and that led to a drop extending for a 4-month period. Now we've come back up. We've had a really good month of January. We've come right back up. We've broken above the green line. We're rejecting from the red line, and we're also just touching and rejecting from the 50 EMA at the same time. This could be indicative of Bitcoin needing to correct downwards, perhaps flip that green line, and then come back up later in the year and do something like that. That's what this is indicative of from a TA perspective. Now, we can dive into short term now, understanding that, and try to answer that question a little bit better. Right, if we look at the short term, what can we see? We can see overvaluation. Quite simply put, we can see overvaluation, okay? I've discussed this so many times, I'm not going to go into it way too much. You can watch yesterday's video for a full breakdown. Not much has changed since then. Pink line down here at 21.9k is the lower line of the range. The top of the range is 25k. Break the pink line below, we go downwards to the green box. Break the pink line above, we go upwards to the red line. The red line's at 28.6k. The green box is down here at 20 to 19.5k. Very simple, okay? So we're waiting for a range break. But we can make some predictive measures within the range, and we can probably see that, hey, look at these structures here. Well, first and foremost, we had an ascending wedge formation. It broke to the downside. Now we've kind of found support on this yellow dotted line, which kind of forms some sort of ascending, broadening wedge formation, as you can see there. That's still a bearish structure. At the minimum on Bitcoin, at the minimum, I would expect Bitcoin to correct downwards and retest the bottom of this range, this pink line here. That's what I'm expecting to happen. As to whether we break that pink line, we'd have to analyze that when the day comes. But at the minimum, I would be expecting a retest of that pink line at 21.9k. I do genuinely expect that to happen. Now, relating this back to the macro picture, and the ultimate question is, do we get above this red line and the blue EMA on the monthly chart, which is much, much needed at this point in time? It's hard to say. Can't answer that at this point in time. What we can say is this: the DXY, this pink line of a DXY, as we know, the Bitcoin chart is reverse correlated to the DXY. If a DXY goes up, Bitcoin goes down. DXY goes down, Bitcoin goes up. The DXY is breaking back above resistance. Now, it's not confirmed yet, because we have seen weekly candle wicks above this pink line before, but it is showing a lot of strength. And zooming into the shorter term chart on the DXY, such as the 4-hourly chart, we can see that we actually had a descending channel formation on the DXY forming here. We broke that channel to the upside, and the DXY has skyrocketed since then. This break to the upside above the pink resistance is not confirmed yet, but it is good to see. Well, it's bad to see for Bitcoin, I should say. It's good to see for the DXY. And if we're looking at something like the S&P 500, we've also seen a rejection on the S&P 500 from the resistance at 4,180. And we're trending downwards towards support there quite rapidly. So rejecting on the S&P 500, breaking upwards on the DXY, and the Bitcoin chart's not looking particularly strong. So I wouldn't say Bitcoin's looking strong at all right now. I'd say that Bitcoin in the short term is looking quite bad. Now, with that said, I don't recommend making any moves until the range is broken. The range being between this pink line here and this pink line here. I don't think it's worth making a move until that range is broken. I don't believe in trading ranges. I believe in breakout trading. And so I always say that, even in my BIP group, we're breakout traders. We don't trade ranges. Ranges are very choppy. There's no need to take that risk. So I don't think it's worth making a move at this point in time, but I would say it's more likely than not that Bitcoin does correct downwards here. Even if Bitcoin corrects downwards, even if Bitcoin goes down to 19.5 to 20k, I don't think that's bearish on a macro scale. I think that's a much needed correction. It's a healthy correction. I don't think it damages the long-term Bitcoin structure. And you can see that quite clearly here. Look, as I said on the monthly chart before, if Bitcoin goes down and breaks below this range, breaks below the pink line, and trends downwards to the nearest support at 19.5 to 20k, on the monthly chart, 19.5 to 20k is a major support zone. That's where the green line is, right? That's where the line we held in 2017. That's where the line we held for 5 or 6 months here in 2022. That's where that is. That would be a healthy retracement, a healthy resistance support flip, and we can build off of that and go upwards in the future. So even if Bitcoin corrects downwards in the short term, even if we have a red February, which I think is relatively likely at this point, even if that happens, that's not a reason to be like, oh yeah, 10k Bitcoin's coming, guys. No, that's a very healthy correction, a very healthy resistance support flip on the macro scale, and it's actually very indicative of future further moves to the upside. That is what we want to be seeing, in my personal opinion. To a certain extent, that is what we want to be seeing. Because if we break everything here, think about this. Back it up for a second. My whole ideology around Bitcoin relies on the 4-year cycle theory. The way I predicted the top in 2022 at 63k was 4-year cycle theory. The way I predicted the bottom here at 16k, just after the bottom at 15.4, was 4-year cycle theory. The 4-year cycle theory doesn't say we blast the upside to 100k this year. It doesn't say that. If we keep breaking upwards at such a rapid rate, we are in a sense breaking parts of the 4-year cycle theory. I personally, being such a believer in the 4-year cycle theory, don't want to be seeing Bitcoin break massively to the upside again. I want Bitcoin to have a healthy retracement down to that 19.5k level so that it drags Bitcoin out and it follows that cyclical theory and it follows that sideways consolidation that we need so that we can make a further move to the upside over the next month or the month after that, March or April, something like that, right? Right now in February, I do think we need a correction. I think it would be great to see a correction. I think the charts do reflect the fact that a correction is likely. So we're just going to have to wait and see what happens there. But I thought that was worth bringing up there on the monthly chart, and it does kind of outline, let me find the chart here. we're seeing a rejection here, but it does kind of give you the information that even if we do go down, we are still in a very healthy position, and this rejection might actually be much needed to cool down after such a large rally to the upside, because people don't really realize, right? The market's been very boring over the last year, so people don't really realize how big that January was. A 39% gain in 1 month. The biggest gain in 1 month since October 2021 in peak bull market. 14 months in between October and January 2023. That was a huge gain. It was a huge month. And people might not understand that because obviously the numbers are lower now. This is something people need to understand as well. Back when we were up at 60K, a 10% move was 6,000. Okay. Now we're down at 20K. A 10% move is only 2,000 USD. So the number, the increase in number might seem small, but the percentage is still large. Okay. So we had a huge January. It would make sense to cool down in February, but I won't dwell on that point anymore. We've covered it quite a lot now. I want to move on to the second part of the video, which is answering questions from yesterday's video. I've got a few very important questions to answer, a few questions that a lot of people have, and then you might find them very interesting. So before we do that, I want to look at a couple of things. Firstly, the Bitget Exchange. It's the default exchange on my Wolves Crypto YouTube channel. It's the default exchange for the VIP group. It's got 5 times lower fees than Binance. It's non-KYC. It's got a protection fund in case an FTX situation happens. You can get reimbursed in your funds. Everything you need in an exchange is on this exchange. And to top it all off, you can sign up using my referral link for a 15% discount on fees and access to a reward center with over 5,000 USD in rewards. Sign up using my referral link. It's the best way to help the channel. And then also, if you want to learn how to trade, you want to become a trader, hence the name of the course, Become a Trader, a 10-unit course. You can do so using the Crypto Academy. Check out the website in the description and pin comment. We've got all the information on the website, and you can throw us an email at the email address we have listed on the website, and we'll send you all the information back that you need to make an educated decision. All right, let's dive into the second part of the video. So first question here by Sparrowhawk. He asks me to basically go back in Bitcoin's price history and basically identify where I would have bought Bitcoin, where I would have sold Bitcoin. Now, obviously, this is very biased, okay, because hindsight's 2020, and also I can just say whatever I want to make myself look like a superior analyst here. So what I'm going to go ahead and do is I'm going to show you where I bought and sold Bitcoin historically. Not even that, where I was bullish and bearish on Bitcoin historically throughout the period of this YouTube channel. If you don't believe me, you can go back and cross-fact check me. So I started the YouTube channel, started Wolves of Crypto around, let me see, it was probably around May 2021, I believe, maybe June 2021. But I was on Twitter and I was on Telegram in the start of the bull market, maybe around April or something like that. I was around in early 2021. I only started YouTube later on, I think May or June, something like that. But essentially, my overall thing on Bitcoin has been this. And I'll tell you why I've been making these moves. So obviously my basis of Bitcoin, my basis of all my fundamental moves on Bitcoin is 4-year cycle theory, strongest state range trend in Bitcoin's history. I heavily believe in the 4-year cycle. It's what I base basically all of my macro decisions on. But there are obviously other things you need to base your macro decisions on. You can't purely lose the 4-year cycle theory. And so I'll show you some of those things now. So one of the things, right, and I don't have the exact TA I used at the time, but I did actually have heavy investments in altcoins, heavy investments in Bitcoin, during the bull market up until this point here, up until May before the crash. I identified in May, I'm not going to bring it all up because it'll take too long. I identified in May that we were seeing a dramatic move from Bitcoin power to altcoin power. Generally speaking, during bull market, and what we saw in 2018 was when you see that move in a bull market, right? When you see the move from Bitcoin dominance to altcoin dominance, you're generally seeing the end of the initial pump of the bull market. That's what I identified. And during this drop here, in fact, during the bounce rally, I said, get the hell out of Bitcoin. Get the hell out of altcoins. This is not looking particularly good. Why did I say that? We broke down from an ascending wedge. We saw a lower high. We saw a rounding top at the same time. I'll tell you now, I didn't expect the drop to go all the way down to 28.6, to where to go, 28.6K, but I did certainly expect there to be a drop. And you can go back and watch maybe my Twitter post would have been, maybe not YouTube channel because it might not have existed yet. You can go back and check out my Twitter post from this period of time here in May 2021. That rally there, I was trading altcoins because altcoins were popping off. This is a period in which altcoins were doing massive things. But I was saying, get the hell out of Bitcoin and stay very cautious on altcoins. And as soon as we lost this support level here, down here at around, I think it was this one over here where we had that candle close. Again, you can go back and fact check me if you want. As soon as we lost that bearish engulfing candle, I was out. I was out of Bitcoin. I was out of altcoins. I didn't hold anything, and I didn't suggest anyone held anything throughout this entire consolidation period. I identified the fact that we had support stemming back from here in 2021, just like a lot of people did. And when I saw on the very day, and Megawell Crypto did as well, on the very day we saw this bullish engulfing candle of support with bullish divergence on the RSI, with an RSI triangle pattern break to the upside, on that very day, I said, get back into Bitcoin, get back into altcoins, we're going to see another pump. We saw another pump, and the exact same formation kind of played out again. Right? Just like we saw over here in 2021, we saw this rounding out structure. We saw higher highs, and then we finally saw a lower high. And I did the exact same thing as I did over here. It was the same pattern. I did the exact same thing. I said over here, once we rejected from 48K, get out of Bitcoin, we're going to see another drop. We did see another drop. During that drop, I believe we might have bounced off of the bull market support band. We did. As I saw that weekly candle close back above the bullish engulfing on the weekly chart, I said, hey, get back into it. We saw a final rally, and that rally took us all the way up to here. I thought, at the time, I completely admit, I did think Bitcoin was going to go a lot higher than 69K. It was surprising to me that we didn't go higher than 69K. I was very, very bullish on Bitcoin up in here. But as soon as we lost support on Bitcoin, I'm telling you right now, as soon as we lost support on Bitcoin, as soon as we formed this high right here, what I saw immediately was a bearish harmonic pattern. That is basically an M formation with the right side of the M tilted higher to the upside. When we broke the neckline of that formation around 63K, right, I said, get out, this does not look good. At that time as well, the 4-year cycle theory was coming to an end. And I said, hey guys, this is the start of a bear market. And lo and behold, we saw a massive bear market. During this initial, this was the kind of a big dead cat bounce. I remember during this dead cat bounce here from around January 2022 through to around, where was it? April 2022. Everyone was getting bullish again. Everyone thought that it was just a correction. We're going to go back up. Me and Megawell Crypto were some of the only people in the market. Dead set. Some of the only people in the market saying, no guys, it's a bear trap. It's a bear trap. Don't do it. Don't get back into Bitcoin. You're going to get wrecked. It's a bear trap. We were telling you guys for a long period of time. I had a lot of people hating on me at that point. And we broke above the bull market support band. I wasn't expecting a break above the bull market support band, but we did get rejected just a little bit higher at the 200-day SMA and the top of the channel. At that point, we entered short positions. I heavily advertised getting to short positions, and we broke down, and we saw kind of that final swing to the downside into this region we're seeing now. And, you know, that gives you an idea of the kind of TA you're kind of using. A heavy usage of volume, heavy usage of market patterns. You can see the ascending wedge. You can see the ascending channel. Heavy usage of lesser known patterns, such as harmonic patterns. Not many people know that. And then heavy usage as well. Moving averages, horizontal support levels, and of course the 4-year cycle theory being the overarching piece of evidence. So I'm not going to go back and kind of show you, you know, exactly how much profit I'd be in if I randomly made up this hypothetical position on Bitcoin, because it's completely biased and I could easily manufacture that, and there's no reason for you to trust me what I'm saying. But what I can say is what I've done in the past, and that's exactly my track record, and you can go back and verify that information. So another question here, another 2 questions from Lee. Do you day trade at all, or do you only buy for long-term hold? To be clear, I'm referring to leveraged long short positions being in and out of price changes in both directions. So yes, I do day trade. I'm primarily a day trader. The Bitcoin position that I'm long-term holding is rare. I don't usually long-term hold positions. I've held Bitcoin before. That's about it. I do mainly trade. And day trading, you know, day trading's, I suppose, a little bit different to swing trading. I'd say I'm mainly a swing trader, and that means I'm entering positions that last anywhere between 2 days and a couple months. But realistically, my average trade is probably done open and close within a week. So yeah, I suppose I'm a swing trader more than a day trader, but I suppose that does fall into the same category. So yes, I do use leverage. I do trade. That's my main way. Actually, I'm a trader. I'm not really an investor. I'm more of a trader. But the second question is this. How do you determine when a support resistance level is confirmed broken? So a lot of people have trouble with this, and the reason why people have trouble with this is because of fake outs. And for example, even just looking at the chart we're just looking into here, we can take this we can take this resistance level and support level here at 48K, for example, 48.9K, and understand that even with this support zone being clearly identified, we still saw long wicks to the downside below and above it. So one thing I'll tell you is this, okay? Wicks to the upside and the downside are always going to happen. You're always going to have market patterns, and they're always going to wick to the upside and the downside. There's always going to be fake outs, and you're always going to be confused as to where to enter. If there was no fake outs, if fake outs didn't exist, I guarantee you I'd be a trillionaire, because fake outs are literally one of the only things that ruin my trading plans, right? So fake outs are a big deal. There's a couple ways you can minimize fake outs. And there's no real way to say it other than just use other TA. So use things in coordination. So for example, okay, so here's an example. If you have an altcoin, our altcoin's in a triangular structure, okay? And you have Bitcoin over here on the right-hand side, and Bitcoin is knocking its head on resistance. So altcoin is breaking to the upside. It's broken out. But Bitcoin is still over here, and Bitcoin's still below resistance. If you enter that altcoin at the breakout, okay, while Bitcoin is still at resistance, you're probably going to get faking out, because Bitcoin is likely to reject And since Bitcoin controls the market, your altcoin is likely to lose momentum on that breakout. So one of the ways to stop fakeouts from happening is cross-check with Bitcoin constantly. Wait for Bitcoin to break out and your altcoin to break out before entering the trade. You'll minimize fakeouts just by doing that. Another way is using the RSI in conjunction with your trading strategies. So for example, if you had, this doesn't really exist, but say for example, we have this pattern here, right? If you had a hypothetical pattern, I'm just going to draw it in here, this pattern on the RSI, and you had the same exact pattern on the price action, what you'll notice is that the price action breakdown and the RSI breakdown may not happen at the same time. You may see the price action breakdown first, but the RSI is still on support. Wait for the RSI to break down as well, because the RSI is a momentum indicator. If the RSI is still on support and the price is broken down, it is likely, it's not likely, but it's certainly a possibility that you bounce anyway, because the investors, the traders are following the RSI still rather than the price action. They're still reacting to RSI. RSI is still in support. They're not going to enter shorts yet. So another way you can do it, so one of them is cross-checking with Bitcoin. Another way you can do it is cross-checking with the RSI. If the RSI is a triangle pattern, it's still a resistance, but the price is breaking out. Wait for that RSI to break to the upside as well. Okay, get the extra momentum. Third way to do it is increase your time frame. Obviously, fakeouts happen all the time, and usually they happen on shorter time frames. Like you might see a structure that's been forming for 1 month break to the upside for 5 minutes, okay? And that's not a breakout. That's an unconfirmed breakout. 5 minutes doesn't constitute a breakout. So maybe if you wait for daily candle close instead, you might be lowering your risk. But ultimately, using all of those things together is the best way to minimize fakeouts. And even then, you can't completely eliminate them. It's simply impossible. Fakeouts do exist. You can minimize them, but you can't eliminate them, unfortunately. If you could, trading would be mighty easy. But a couple more questions here. So this guy says, I'm trying to grow my portfolio by taking profits on pumps and adding them to my other coins. I like when they are down. Do you think this is a fast way to grow, or is leaving the coins alone into approximately the new all-time highs better, eliminating risk if I sell too early? So he's asking, should I hold or should I trade? Well, first and foremost, I'm not a believer in buying altcoins until the halving. I don't think altcoins should be held into the halving. And the reason is because Bitcoin outperforms altcoins on a general basis from the period of the bottom to the halving. Bitcoin's outperforming altcoins. So I don't believe in holding altcoins until the halving, and even at the halving, I don't necessarily believe in holding altcoins. I think holding altcoins creates a lot of confirmation bias for those coins, and you're missing out on a lot of opportunities. If you want to make the most money possible, the best way to do it is to trade. But obviously, if you have no idea how to trade, then hold. So the best way to make money is learn how to bloody trade. That's why we created the course, okay? Trading is the most profitable thing in the market. Holding altcoins, lots of confirmation bias. You get a lot of fan-based bias as well. You know, it's not an ideal scenario, and also it's not actually that profitable until after the halving, okay? And even then, holding an altcoin during the bull market, who says you chose the right one? Yeah, altcoin's going to pop off, but your one might not. It might only do a 2x, and then you're missing out on ones that do 100x. So holding altcoins in general is kind of murky water in my opinion. So the basis of your question doesn't really resonate well with my channel, unfortunately. But I think I'm going to leave it at that. We've answered a few questions there, and the video's been dragging on for a while now. So thank you guys for watching. I hope you enjoyed the video. I appreciate it a lot. Sign up to Bitget using my referral link. That's the best way you can support the channel. Leave some more questions down below as well. I like answering questions. It adds some depth to the videos, and the questions are quite interesting. So leave some more questions below. Thanks for watching, guys. Hope you enjoyed. Catch you in the next one. Cheers.